Do I need to engage a conveyancer when I sign the expression of interest or offer contract? What's the difference between offset account and redraw on a home loan? If I switch jobs but I'm in the same field, can I get my home loan approved? If you're married or jointly buying a property, which person's credit score will you use? Hey guys, Jaden here. Today I'm going to take you through a bunch of mortgage question and answers that we've been asked on the channel over the last year. And more importantly, we're going to go through how to buy a house in 2020. Hopefully answering all your questions, and if you do have any more, make sure you leave them in the comments below and I'll get them in the next video. Alright, so first question. Do I need to open up a credit card to build my credit history? Yeah, fair question, and it's something that gets thrown around all the time. Whilst this is definitely the case in America, in Australia, our credit scoring system works a little bit differently. Josh did a video on this a little while ago, but in short, our credit scoring system up until last year only reported on negative data. So if you'd forgotten to pay an electricity bill, a phone bill, or had just gone into default on a previous credit card, you're not gonna have any chance of getting a home loan. But if you've just left school, gone to uni, never applied for a credit card, and will worry about your credit score, you'll still have a fine credit score because they don't report on positive data. Now, this has recently changed where the banks will report on positive data, but if there's nothing negative on there, your credit score is going to be completely fine. You can actually get a free credit score report from Vita or Equifax. Just Google it online. There's a bunch of sites that can do that, and you can double check your credit score to make sure you're all good. Second question, do we need to engage a conveyancer when we sign the expression of interest or contract to sale? So when you go to buy a property, you're making an offer on it. You're either going to fill out an expression of interest, which says how much you're going to offer, the terms of the contract, finance, etc., or you'll just go in and fill out the contract to sale. Now, this is going to depend on your state. In Queensland, you don't necessarily need to ask a conveyancer or solicitor to check it out, but it is worth it to make sure everything in there is hunky-dory. In Sydney and Melbourne, the contracts are a bit different, so it's definitely worth having a chat to a conveyancer or a solicitor before you sign the contract to sale, simply because once it's signed and once pen's gone to paper, you're legally bound to that contract. So you definitely want to get it checked out, and just as much as the agent's going to push you and trying to get you to sign that contract as soon as you can, just slow things down, take a deep breath, and just remember, you don't want to sign something that's completely going to stitch you up and potentially upset your home buying journey. So fair question. Will buying a car potentially hinder my mortgage application? Yeah, fair question. So these days, the banks are looking at a couple of different things. They're looking at your expenses, your living expenses, like what you spend on Afterpay, your groceries, phone bill, all that stuff they actually look at, and they'll look at what your repayments are. So potentially, sometimes with the car loan, because you're paying it off over 5 years, the repayments can be pretty high. So this question, it's a bit hard to say yes or no, but it can potentially reduce your borrowing capacity. Like we've said before in other videos, a credit card of say $10,000 can reduce your borrowing capacity by 5 times. So it'll reduce your borrowing capacity by $50,000. With a personal loan or a car loan, it can be even more because your payments are condensed and you're paying off in a shorter period. So in short, it depends. If you've got a particular scenario, get in touch and we can check it out. And if you need to pay out the car loan or if you need to change the terms on that, we can work it out to see what's going to work. Ultimately, it'll just reduce how much money the bank's going to lend you. Next question, if I switch jobs but I'm in the same field, can I get my home loan approved? The answer is yes. These days, the banks are a little bit more understanding with people changing jobs. There's some banks that just need one payslip in your new job and you're sweet to go. There's other banks that might want a 3 or 6 month history in the current role to let you get the loan approved. But something that can really help is if you've been in the same field for over 12 months, even 2 years, because it shows a bit of consistency there that you're not jumping from being a baker to a bricklayer, etc., etc. So it's something that isn't as big a concern anymore, as long as you're making income, as long as it's sort of full-time or part-time. They'll even consider casual, honestly. But generally speaking, it is okay. It might just mean instead of there being 30 lenders, if you've only been in your job for 1 month, there might be sort of 8 banks that'll look at it and help you out. Next question, if you're married or applying for a mortgage jointly, which person's credit score will you use? Yeah, it's a good question. And the short answer is both. The banks will look at both people on the application and see what their credit score is like. If there's someone with a really bad credit score and if the other person's credit score is amazing, so by really bad, I mean sort of under 650 on Vita scale, they'll decline the loan, unfortunately. So just because you've got one really good person, one really bad person, it's not gonna even out. The bank will look at sort of overall, and the risk to them is based on if someone's forgotten to pay a phone bill, forgotten to pay an electricity bill in the past and they're smaller debts, and they're looking to give you a massive home loan, they're gonna sort of knock you back. So there are non-bank lenders like Liberty and Pepper that are cool if your credit score is not great. But again, chat to a mortgage broker and you kind of look at your options and see what's possible there. What's the difference between offset and redraw? Yeah, awesome question. Let me try and draw this and explain it. So your loan will appear on your internet banking just like another account, like your credit card, like a savings account, etc., etc. So in the case of redraw, so it'll show like that on your internet banking. You'll have your loan and your day-to-day account. With redraw, all it means is it gives you the ability to, say, transfer money back and forth. So say in this scenario, you have $1,000 in your day-to-day account, you could transfer it to the home loan account, the $1,000, it'll reduce your loan balance and save you, paying interest on $1,000. And redraw just means the ability to transfer the money back and forth between the accounts, kind of like a savings account. So the benefit is you'll reduce your interest costs. Offset, on the other hand, links the accounts. So in this scenario, if you've got $1,000 in your day-to-day account, Offset automatically links it. So the interest is calculated daily, and it means for every day there's $1,000 in your day-to-day account, it'll reduce your loan balance by $1,000 and save you a bunch on interest. So the net benefit's the same. Redraw, you can move the money in and out, but you've got to put it in the loan account. Whereas Offset, you can just leave it in your day-to-day account and it happens automatically. Do you need 12 months rental history? This is an interesting one. The answer is not always. It depends on your deposit situation. So when you're buying a house, the banks generally like to see that you've held at least 5% of the deposit in your account for 3 months. So say if you're buying a place for $500,000, they want to see that you've got 25 grand that's sat in your account for 3 months, showing it's your money and you've actually saved it up. Now this isn't always possible because you might be getting gifted the deposit from your parents. It might have come from the first homeowner's grant. Maybe you've got a big tax refund. So the way around the genuine savings requirement is showing your rental history. Some banks will say, well, if you've been renting for the last 6 or 12 months, you've been making $400 a week in repayments, over 12 months is like 20 grand, then instead of having to show the 25,000 genuine savings, we'll accept that instead. It depends. If you've been gifted the deposit or if it's coming from a big tax refund, it's a way to get around that genuine savings and sort of help you get into the property market a little bit quicker. All right, so that's all the mortgage question and answers for today. If you've got any questions, leave them in the comments below and I'll cover them in another video we do in a similar format. Let me know what you thought. Otherwise, hit me up at huntergalloway.com.au. See ya.